Hello, good morning. Welcome into another episode of Good Morning NASDAQ. Today is Wednesday, jam-packed free Wednesday. We're on the Clover Trading YouTube channel at 9:15 a.m. running a little bit late right now. We do live trading, so we'll be here till about 9:45, 9:50. You got all three Clovers. There's a chart where they should be because I got some manipulating abilities today to get some charts up for Kyle because he couldn't run it this morning because he's on that cruise Wi-Fi. He's still gallivanting around the world right now, so we're happy to have him here. We also have Wine Wednesday tonight, 7 p.m. Eastern Standard Time, unless Huddie's flying again.
I'll be here.
Huddie's here. I'll be here. We'll grab a glass of our favorite beverage and enjoy some conversation with our good old pals. All you guys in the Clover chat. It is the 12th day of June, 2024.
Year of our Lord.
Year of our Lord 2024. We got Austin, Mash for Fun, Wayne, Neil, Angel. Good morning, everyone. Make sure that you hit that thumbs up button. Make sure you're subscribed to the channel. It is free. I just checked with YouTube. It is free to hit that subscribe button and be a subscriber to our channel. You get access to us every single day of the week that the market is open. And we post long form content as well every single Monday. All right, we're going to hop right into it because we are a little behind. There is not a lot to talk about. I'm sure Huddie will go over some gappers if we have any. And we'll just kind of go through our watch list, which is generally only for the 3 and 4 leaf Clovers over at clovertrade.io. But Wednesdays, we like to be generous and give them to you guys. But it is a little bit slow of a week so far, so bear with us. Let us start with Kyle.
Yes.
And I will get you your screen here.
Sure. Pop it out here.
All right.
So yeah, pretty much another GME watch party. Essentially, what I think this week has become. There's been plays, right? We did have KITT. We did have TPET yesterday, which was nice gap and crapper. Gapping down today. No huge gap ups today, so that's a little bit. I mean, it's good to have a break, but it's also sometimes fun to continuously have a gapper every day to look at and or watch. But yeah, literally in my watch, I only put GME, and frankly, the only reason why I'm still keeping an eye on GME is because just everyone's eyeing on what on earth's going to happen to this stock come, June 21st, when Roaring Kitty's $20 calls, begin to expire, and he has so many calls. He has 120,000 calls in, like, I don't know the daily volume of those calls, but there's nowhere near enough liquidity for him to get out safely without actually crushing the price of those calls. So my speculation is he's going to exercise those, but again, he has to exercise them if they're high enough in price. So I think he has to hold it above the 23, 24 area.
I have a chart up of those calls.
Yeah. Yes.
And they're closed yesterday in the 11s. I know he's in from like the 5s, right?
Yeah, so he's up about double, which is great. He's up 9 or not 9, just 9 figures. Is that the right math? 8, 9 figures, somewhere in there. So yeah, that's the only reason why I have this chart and have GME on watch, is because I just want to see how that plays out. Because if he does decide to exercise those calls, market makers or whoever is in charge of delivering those 12 million shares will have to do that to him and give those shares to him, which will cause a not a lot, but a pretty solid amount of buying. Having to buy 12 million shares in the market open or in the open market. But again, today's not June 21st, it's the 12th, so we have, 9-ish days left. So really nothing important for me to watch particularly today on it. And then other than that, that's pretty much it. I mean, again, I made some money on TP yesterday, which is nice, but I have no intention of playing it today. Gapping down here. I did short DEFTF yesterday. Unfortunately screwed it up and missed this late day fade into the 140s. Gapping down a little. Actually, no, it's actually gapping up a little bit. But I have no intention of playing it today. So today could just be a slow, no trade day, and I'm totally fine with that. I think I'm down a few grand on the week, so nothing crazy either way. And yeah, there's nothing wrong with that. I think it's natural for me to want to make something happen. Like a lot is going on. Like I should be making money this week. But the reality is I just don't have to. I don't have to do anything. My last day of the cruise here, so. After this stream and after the webinar day, I might just take the day off if there's no trades that pop up here as we watch the open. So,
yeah, and also side note on GME, I believe they completed their most recent ATM at an average price of 28.5 or something. I still mathematically don't quite get how they did it for 75 million shares, but if that's true, they have a lot of moolah. They have a lot of bees.
4 billion in cash.
absolutely wild, which just tells me that this thing's going to go on for a lot longer. Like, I'm not saying like we'll be watching GME every day forever, but the battle between, it's just like a time battle, right? Between, I mean, they have so much money. They don't have to make a dollar in their actual business for years to sustain themselves.
Right.
So we'll continue to see this battle, the hedge funds versus the jackals, the apes. But it is fun to watch, and as we approach next week, I will still be watching it as well. I was kind of hoping yesterday it would bounce further up into the mid 30s, just because then maybe, because I'm kind of sick of watching this thing break out from the lows, because it makes it very difficult to play it. I know Kyle bought it last Thursday, but even you just don't feel great about buying it that far off its lows. And if there could be any sort of consolidation before like a 60 break, that would be great. If not, and it fades off and this thing dies, and that was Roaring Kitty's last meow, then it is what it is. But I won't be just donating money to it, because I've done quite well just sitting back and waiting for it to actually create patterns. My watch list is barren, like barren. The only plays I had on watch was if KITT, which is a really nice breakout trade from earlier this week, if it were to have gapped up into yesterday's resistance, but we are gapping down like 20% right now, so no play there. It's already back to the breakout level at 21 cents, so kind of a round trip there. We'll be on watch going forward for a first green day, potentially. Traded, 500 million yesterday. So no trade there for today. And then the other two trades I had on like third eye watch was KWE, if that were to hold up in the 90 cent to $1 area, but that is also gapping down 20%. Not dead by any means this morning, but the daily chart candle is just kind of far away from the highs. So, and the volume's dwindling. So, I would have preferred to close around $1 and then a break this morning, but seems like that's not going to be a top watch right out of the gate. And then VERO is kind of the same thing. Not really gapping down too much, but closed kind of far off those mid-range areas in the 120s, 130s. So needs more time there. 130s is my level. If the volume holds up and if the stock continues to hold up, that's really all I've got. It definitely feels like summer trading this week. You had KITT breakout, you had MLGO first green day from, those who play similar trades to me. And that was it. And if you can't hold on to those gains or you don't take those trades, that might just end up being the week. Who knows what the rest of the week has in store. But in summer trading, you really got to pick your spots. You got to make sure you execute, and then you got to not overtrade random setups. And with a watch list like I have this morning, it should, in theory, be a no trade day for me. There's not even any gappers to talk about, I don't think. So summer trading, it's a great time to study, great time to learn. I know a lot of people get upset and annoyed that there's not the ability to just cash in every single day. But when plays do work, you do get a lot of attention towards them because there's not a big quantity of runners out there. And that's the time to execute and then go back sitting on hands. So that's what I will be doing today. Huddie?
Yeah, you bring up KITT. So this was kind of the trade of the week, in my opinion. Really nice multi-day breakout. Was alerting this in the room at 23 cents and selling it at 35 the next day. Pretty much the only real juicy volatility we've seen this week that I think was a clean chart and very playable in terms of fresh charts that came to us all of a sudden this week. So yeah, I think Dom's right to keep an eye on KITT because 500 million shares is a lot of volume for this range, and that we've seen the action kind of stay here. But at the same time, they did an offering midday, ATM offering, $3 million worth. So not the biggest offering given the volume that it's trading, but still not great to see, and definitely killed the run in its place for the time being. So yeah, for me, there's not much to do there. Just going to keep kind of like a third eye watch on it, but I probably won't be pressing buttons unless it gets back up to the 30 range by the end of the day. Then I'd kind of have an interest going into Friday for a multi-day breakout. But I think that's a really far shot given the offering. Again, they kind of killed the move. So that's the thing with summer trading, right? You're going to have few and far opportunities, but there are still opportunities to make your money on. And then it's exactly what Tom said, preserving that capital and not going off chasing that endorphin rush that you got the day before, expecting it to happen the next day, because that's not generally how it works. That is the market open. But I'm kind of with these guys, right? There's really, I don't see many chart patterns. I don't see many gappers. I don't see much volatility. I don't see an edge with GME. So, with trading, it's like you got to get forced to come out of retirement in order to want to place a trade. And like, there's really like, this feels like one of those days where you're not gonna be able to buy yourself a win. And maybe you can, maybe there's a scalp here and there, but like, that's not my MO. I look for big daily chart patterns. I like to make big percent gains when I'm right. I like to lose really small when I'm wrong. And that's just not there today. So just going to keep watch on the former runners, you know, KITT, that's great. GME, fine. IREN is a ticker that I'm vaguely watching. It's not really all that clean, but it's starting to extend itself. So maybe there's something next week there. But again, not today.
What was that ticker?
GDH, IREN, IREN.
Oh, IREN. Oh,
Like
yes.
maybe if that winds up 17 to 19 by next week, I would start to get interest, right? The GDHG is our biggest gapper of the day at 60%, but this is a former Chinese liquidation play. So, and it's 20 cents and it's barely gapping up, so I don't really care for it at all. BMR is the other gapper. Oldie, you know, had a really big gap up and run back in February. I remember because I got my ass squeezed. And then ever since it's had that run, pretty much every run then after has failed. So like, again, I expect this one, I think there's a 75% chance it fails, 25% chance it goes on a crazy run, just based off its gap history. But at the same time, like not gapping up big enough for me to want to short, already gapped up, but not really a chart pattern I ever want to long. So again, like what can I do? Like, no matter where I try to convince myself there's maybe a potential trade, like there's not. It's just not there. It doesn't fit criteria. It's not A+ enough for me to really come out of retirement. So there's nothing I can do. And that's just the name of the game sometimes, right?
Yeah, and this is what I mean by, I think I mentioned it yesterday or a couple days ago, where it's like a lot is moving. The market necessarily isn't slow per se, but it's when you have your own style or your own, what's the word? Your own setups, and if the setups don't appear, but like you have 5 other things going on that aren't your setup, it's very easy to see other traders, other people doing things and making things happen, and you're over here just waiting along like, wait, why aren't I making something happen? But I think the reason, perfectly what Dom said, is like he nailed him.
Uh-oh.
Oh,
Where you go?
dang cruise Wi-Fi. Oh.
You're back?
Oh. Back now? Can you hear me now?
Yeah,
We can
nailed a trade, and then what? And then I was sitting.
Oh, I was saying if for those who like have a similar style to Dom, if you didn't nail MLG first green day or a KITT gap up, like that's all you really got offered this week, you know. And so if you didn't nail those, and then you went and trade out other things to try to nail something else that wasn't really great, you're probably having a red week. You know, that's like the small margin of error that you're given in markets like this. So a lot can happen, but it doesn't necessarily mean you have to do anything about it. If that makes sense. So
Yeah, I think it's a lot easier to see, you know, the type of verbiage we use throughout the whole year, which is, you know, really like stay in your lane, get in where you fit in, like, you know, prioritize your watch list so you're only taking trades that really fit your criteria. And it's really hard to see that when there is so much going on and there's so many kind of plays that are B level, C+ level that work, and then A level that don't work, and it's really confusing. But in markets like this, like the way I like to think about every week throughout the entire year, and then when you really just start to average everything out over the course of a whole year, is to really look at your stats and go, where was the biggest trades made? Okay, there was an average of, if I risk, you know, $1,000 a trade, I make on average 2 $5,000 winners every month, right? Like that is what, 12 trades over the course of the whole year. And in slower markets like this, I really try to, on Sunday night, Monday morning, visualize like there might be one really good play this week and then a couple B pluses. And there's no guarantee that any of those are even going to work. But the more damage I do to myself by trading C's, C pluses, B minuses, you know, the more I'm going to really affect my overall numbers. And, you know, when I miss something like a KITT on Monday or Tuesday, I think it was Tuesday. What is today? Wednesday. It had to have been Monday. You know, I don't immediately think, okay, there's going to be another one tomorrow or the next day in this type of summer market, and I'm going to nail it. I think that was probably my best opportunity the entire week. and I missed it, or if you nailed it, then you nailed it. And whatever it is, whether you missed it or you nailed it, the perspective should still be the same, that there's probably not going to be another one. If there is, I'm ready and I'm prepared for it. And if I identify it, I'll go into it the exact way I should. But whether you nailed it or whether you didn't take it, your perspective shouldn't change based off those results. And even if you did take it and it had failed, that still could have been the best setup of the entire week. And that is always the same mindset we should have every single day and every single week. It's just a lot more obvious in summer trading, because all those one-off trades during a 5-day rolling period that work out really well, they go under the microscope because there's not 5 other ones that you could have taken to make up for it.
Amen. I agree. But anyways, do we do a little couple questions, comments, concerns?
Storm says no plays again, but guys, according to Sykes, this is an insane market.
I mean, that's what we mean. Like, it definitely has its characteristics of insane. I mean, GME is a perfect example of that. It just doesn't mean we're making money off it per se. In fact, I've actually made more money, I think, I have to double check this, but I think I've made more money on GME long than I have short this entire period. I think I made 20, 30 grand overnight on this night. I made 20, 30 grand on overnight this night. And I definitely have not made that much short. So it's just, and it's not like, and I say that only because it's not like me. You'd think I would really have just milked these short for as much as I can get from them, and I just haven't. It's a little bit different. So it is insane, but it's not. It doesn't mean everyone's making money that way, which is fine. It's not a bad thing either. It's just something you need to understand, that just because maybe some other people are making money doesn't mean you have to by any means. Vice versa. The people who are having an insane time making a lot of money might have had no, or might not have been making any money during the winter, and we're like, January and February being our best months ever. It flip flops back and forth.
Yeah, the way I judge a market on if it's insane or not, which is why we always refer back to like 2020 and 2021, is like, what does my watch list look like? Do I have 5 first screen days that week I got to watch? Do I have 7 multi-day breakouts I have to watch? Is there always a first red day every day of the week? Like, that's insane to me when stocks are actually running enough to where we have patterns across the board in a plethora of places, long or short. And we have runners, and we probably have gappers in those times too to give us more runners. And an insane market to me is like when, say, you have 3 stocks that are hot. Let's call it like GME, AMC, FIFI. And then after that first red day, we have 3 new runners the next day that start and that squeeze out and that go on multi-day runs. And then I'm buying the first screen days on GME and AMC. And then I'm buying the breakouts on those 3 2 days later. That's insane to me. When I have basically 0 playable stocks on my watch list, that's when I say, and there's no gappers. Like, it's not like it's just like a gappers market and there's just not turning into multi-day runners. Like, the biggest gap per day is 55%. Like, not insane to me. Jimmy trying to go green. When's AMC going to finish their offering or their ATM?
I don't think they have one. I thought
they had one on the backside of the May run.
No, that wasn't it wasn't ATM. This time it was I think some debt holders converted their shares at a 733 average or something like that. Something where it wasn't a traditional ATM. It was a little bit different. And so I don't know if those debt holders still have those shares at 733, or they just converted at that price, but then they just sell for a small loss. I don't really know the details. I just know it wasn't it was not a tried and true ATM like
so
GME.
Those shares can be sold at any time. It's just a matter if they want to take profits or loss.
I think so. Yeah. So AMC ever got over 733, or maybe they did. I mean, they did the offering. They did it, I believe, this day. If I'm not mistaken, or maybe overnight the next night, so maybe they never had an opportunity to sell. Again, I don't know the details, but yeah, I've kept an eye on AMC with GME in case it ever got over 733 to see how heavy it would be, because then that would kind of give me kind of confirmation that, like, oh yeah, so they do have to, or they do want to sell over 733. But again, I don't know if that's true or not, so I'll have to wait and see if it ever gets over there of that price. But to answer your or sorry, go ahead, Eddie.
No, you keep going if you're on something.
I was going to say to Dom, to your point about how the math works of GME's ATM getting out, over the 3 days since they announced the ATM, so that was Friday, Monday, and Tuesday, there's about 500 million, about 550 million shares traded that day. and if they all sold all 75 million shares, that's about, what is it? I think I saw it on Twitter. Someone did the math. It's like around 13 or 14% of the volume, which is actually pretty standard. If someone's going to heavily sell an ATM and get out, they're usually anywhere between 10 to 15% of the volume. Any more than that, they're going to really crush the stock, and 10 to 15 is already kind of crushing it. So it's pretty impressive just it's had this much volume for them to sell that much, but that's how they did it. You know, the math checks out.
That's what's so impressive is that
13%.
You know, you've seen liquidation plays, and everyone in the chat, you know, look up any China liquidation plays from the past, and just what like actual more than 10-13% looks like when they sell, and it's just people hitting the sell button. How bad it can get. It's like incredible to me that they can do that, announce an offering like that or an ATM, and get it done in 3 days, and the stock is still like making higher lows on the daily chart. Like,
yeah, it just goes to show you how much maybe those China promoters are actually selling, like relentlessly, nonstop, all day long.
Well, and just how many people are still bidding for GME. Like, how much volume is trading outside of that? Like,
oh yeah, of course, yeah. It's that's the insanity behind it. That's where I think this is an insane market, because it's stuff like this, not necessarily setups or plethora of them, but just this one event that has just never been seen before by any participants ever. You know, it's such a unique scenario here. So,
well, we spiking.
I feel like the word insane market is so subjective
yes.
to the person talking about it. Like, what niche are they trading? You know, how are they trading it? What are they finding to be exciting or volatile? You know, Sykes always talks about these pre-market runners, right? Which is like never a situation that I'm trying to trade. So his hot market might be a very different world than mine. And in my opinion, there's only been 2024 has been better than 2023 and 2022. There's been more opportunity. There's been more gappers. There's just more frequency of plays and volatility in 2024. That part is absolutely correct. But you have to be careful about the marketing copy. And like, I think it's built to instigate you to want to trade. And in reality, like, just because someone else is trading doesn't mean it's your market. More importantly, like, if I had to characterize the hottest time during this year, it was February. Bar none. February was a very hot market. You had stocks running 500 to 600% almost every single day. And that obviously correlates to my biggest month of the year, because there was so much opportunity in that month. And we haven't seen a month like that since February. But at least we had that in 2024. So that kind of characterizes the market that's been here. In May, yeah, it was crazy and insane for a minute. GME was going towards 60. And again, a lot of opportunity. FFIE, a ton of opportunity, long and short, but that's all gone again. And we're back to the same cadence that it's been, which is brief moments of insane shit, and then try to preserve capital until that stuff comes back. It's not like, oh, insane market, you have to show up every day and push buttons. That's not how it is. It's just identify that there is opportunity and be ready to strike when it's applicable to you and your pattern. And like, that's kind of how it always has been. You know, for all of 2024, even 2023, just more patience was necessary.
Right. In terms of even more subjectivity to insanity, as a good thing for me, or in my opinion, is the overall markets like SPY already hit all-time highs yesterday, right? And the QQQ, and then this morning they have inflation below expectations, which I think is the first time in this entire. Don't quote me on that. I didn't follow closely enough, but this is a fairly bullish thing to come out, to have actually inflation lowering faster than expected, especially with an FOMC meeting today, which makes it even more friendly, or people are maybe even being more eager now that the Fed will eventually start cutting rates, because they're getting to their goal of 2% inflation even quicker now, at least in this this very short term outlook of just having the CPI get sent out today. Because again, we're at all-time highs as of yesterday, and we're already now gapping up again into this huge run. And when I zoom out on like the S&P 500, it just looks even more. Again, I don't want to use the word insane, but again, it just looks and again I say that because in the event, let's say hypothetically, FOMC starts later day at like 2:30 p.m. They usually do it or whenever, and they shock the world and they come out and say, yeah, we're going to lower our first interest rate. Like we're going to go from we're at 5.25 to 5 down to like 5. I mean, I could see the markets just ripping on that kind of idea. So who knows? I'm just talking out my butt here, but just thinking about that too in terms of no matter what market you trade, it could be insane or exciting anywhere. anywhere, anytime, all the time, never, you know, the subjectivity of it all. So. But anyways, maybe last few minute questions before we close it out.
Yeah, just a lot of people talking. Someone asked, did you guys catch IREN got in yesterday at 10:50 and held some of my position into today? I never even saw it.
That's a good trade. Yeah, I didn't see it until scan into today.
Just not my
style.
Yeah,
there's no real setup for me that I initially see here. I guess the breakout earlier last week over the mid 9s looked pretty good in hindsight now, but even then it was a 3 to 4 day swing to get it from the 9s into the 11s, 12s, 13s here. So nothing for me, but I do agree with Huddie what he said earlier, where if this does go to 15, 16, 17 this week, with no real choppiness in between, this could offer some kind of solid backside. I mean, it kind of did that back in December of 2023. It ran from about mid 5s to about mid 9s and actually offered a 2 or 3 day pullback after that run. So definitely something to keep an eye on, but hasn't really set up for me just yet.
And that's the thing about these markets is, I know for a fact that that's not something I should ever be trading. But if I sit here and it's 16 minutes into the day and I haven't even thought about clicking a button, you start to try to find stuff to put on your watch list. And then that could be a potential problem down the line, because then 2 days later you take that trade, even though it's something you would have never seen if you had, let's say, 3 really good trades this morning. And it just kind of snowballs, which is why it's really good. I feel like at these times to have that trading journal or diary, understand where your head's at, and really just try to be perfect when it comes to what you trade. And make sure we're, for me, my big goal this month is trying to limit trading just altogether. I don't know what the month's going to bring. And if it was the hottest month ever, I probably would have failed that goal, for the number of trades I want. But just the perspective of every morning showing up, if it's not a perfect trade with fits all the criteria, I don't want to take it. I don't want to take it. I don't want to take it. And this is a great time to get ahead, I think, because if you do take 3 to 5 trades a week and you win at a 40-50% clip and you're making good risk reward, it's a great time to grow, great time to study, great time to learn. We have our boot camp coming up next weekend, June 22nd through the 24th. You can still get access to that. Get your questions ready to go for that, because you'll be able to ask a lot of them in the roundtables and Q&As. But summers, I feel like so many beginners lose interest or make their problems worse, when I think if they're with the right perspective, it's a great time to get into the market and a great time to learn, because you have all that extra time and you can really pinpoint that level of accuracy when it comes to making sure you're on top of the right plays. And that will only translate when the market picks up, because you already have the right head on your shoulders on what stocks you want to trade and what's the criteria you're looking for.
Okay. A couple more questions here. Parker says it sucks that mainly it's a shorts market since 2022. Get small burst of great long market. When the F is it going to be good for longs for an extended period of time? Again, probably an opinionated question. I don't think small cap is ever really good market for longs. Again, you're buying the worst of the worst companies. So to define that as a good market for longs, it's just you're playing in the graveyard of stocks and you're hoping one kind of resurrects itself. With that being said, I'm doing really good with longs and small cap this year. The risk to reward ratio, the moves have been explosive. If you are in the right situation and it does have a nice move in a close and gaps up, the risk to reward ratios on a lot of these are fantastic, where I lose pretty small when I'm wrong, and when I'm right, I can make 30, 40, 50, 60%, sometimes 100. So in that sense, when you have gappers, it's a really good market for longs, but you still have to pick your spots very specifically, because you're dealing with graveyard stocks. And you just have to know that most of these are horrible. And what piece of information can we define and to further specify which stocks we want to actually trade to the long side? How do we find that edge? Why? Going on to the next question, which is, did you guys nail KITT breakout? Not a lot of multi-day continuation there. I have a huge problem with that sentence. But I did nail KITT breakout because it had a really good catalyst, given the market players, given the stock selection, given what the catalyst was, and given who's in the market. You can kind of tell where the dumb money is going to go and then capitalize on it. But KITT is still a horrible company. If you weren't in and out within a short, brief period of time, they did an offering midday. Like, that's not what good companies do. So
I mean, it gave you 40 cents before that.
yeah, and that's why I want to kind of talk about the part of the sentence I don't like is like we really have to, and I dogged on someone in the chat yesterday about providing your own value judgment relative to the objective facts of what the stock or the data is telling you. You can't tell me there's not a lot of multi-day continuation on KITT when it literally gapped up and continued for multiple days. It's objective. It's not my opinion on whether it was a multi-day continuation. It broke out on one day. It gapped up 50% and then pushed another 20 before failing because of an offering. That's a multi-day move. I mean, in its purest definition, it's a 2-day move. Let alone the fact
Which
that
is
it's
far and
4
away
days separate.
better than most of the breakouts we've seen in the past 2 years.
Right. So there was good continuation there. Yes, we did catch the KITT breakout, specifically just because it attracted the right people in the market, right? Again, I keep saying this in all of our webinars. This is why education's good, or just being there for webinars. You know, who are the market participants right now? You got to think, who are the longs and who are the shorts? When Roaring Kitty starts going viral on Twitter and YouTube, it brings in a lot of fresh, dumb, young money. And once they're kind of in and out of GME, they're looking for that next endorphin rush. And you have to imagine that they don't have a lot of money because they're young, dumb, and full of money, whatever it is. So where are they going to flock? They're going to flock to tickers that they can buy a lot of shares of, so cheap tickers. They're going to flock to viral or crowdsourcing type of catalysts. So when someone says KITT is Roaring Kitty's ticker, as stupid as that might be, that might attract the crowd because that's where Wall Street Bets is going to get behind. And again, it's like day trading as usual. Like, what did GME do? It had a good green day, it popped into a second day, and then it failed. What did KITT do? It had a good green day, it popped into a second day, and then it failed. So same psychological chart patterns are presenting themselves, and it's just really about putting the dots together and being there for the moment or the event that's occurring. And that takes a lot of time to refine, but that's why education is here.
The one thing I'll add to that as well is, in general, right? And Huddie briefly mentioned at the beginning, the overall scope of when you're going along in a small cap market, you have to understand the long term game of most of like 95 to 99% of these companies. They're here to sell shares. Like that's literally what it is. So if you're already longing small cap stocks, yes, it can be very profitable. I'm not saying it can't, but it's not a coincidence why you see some of the biggest, longest, trading for 10, 20, 30 years in this space typically become short sellers, because they're on the side of these companies who are looking to dilute and just sell shares, and their stock goes down 90% over the next 3 to 4 to 5 years, right? So if you are longing in general, again, longing is still going to be very profitable because you do get some of these crap stocks to run massively. Again, FFIE being one of them, probably the worst company in the entire stock market, on the verge of bankruptcy, ran 2,000%, right? Beautiful multi-day run. The problem is, or the art of it all is that you have to be nimble. You can't overstay your welcome. And I think that's kind of what he was getting at with KITT is like, if you can take it from a breakout in the low 20s and make it even into the 30s, I mean, you're approaching a 50% gain. At some point you have to ask, like, what more do you want? You're not going to catch the, FFIEs don't come around every week, every month, every year. The name of the game is just tackling on singles day in, day out, and those add up, and so, and it's funny I even say a 50% gain is a single. It's not. So KITT, getting a gap up like that is pretty solid. Yes, obviously in other markets this would have kept going and gone higher, but again, you got to remember we're not in that market. Or when we're in a higher interest rate market, companies immediately go to diluting over getting loans for money. I mean, there's been more offerings in the last, I think, month or two than I've probably ever seen. Again, specifically to all the IFFIE sympathies, we had CRKN, right? I don't know if they did an offering, but we had AKN offering. Literally the morning it spiked, they did an offering, and it got crushed. That's why it has a candle like this. What was the other one? Yeah, GWAV. Wow. Literally gapped up, announced earnings, immediately right after did an offering. Why? Because reverse they don't want to take... And then reverse split. They don't want to take on a business loan in these interest rate environments that they're going to cost them 10, 15, 20% a year. when they can just increase the shares of their float, sell millions of them, make millions of dollars, and then just reverse split their stock and continue on business like nothing's brought. Like it all comes all on the shareholders. So you have to, long story short, there are long opportunities. It's just how you want to move and shake and be nimble in between those opportunities, because they do happen. You just can't overstay. You can't. Otherwise, you will end up down on your position and take losses.
And
again, that's why
you have to be so specific about what you trade. Like when I track my trades, the best long months, when I perform the best on a long bias pattern, or in my long portfolio, I guess, patterns, it's when I take the fewest trades. When I have like 5 to 10 long bias trades in a month, I'll have a really high win rate and some exceptional risk reward. If I have like 20 or even anything more than 10, honestly, long bias trades in a month, right? Like I'm probably doing myself more harm than good. Like I just know that I have to be super selective about what I trade, or otherwise I'm dancing in a graveyard, of stocks that don't want me to make money, right? So it's like you really got to find the one that the needle in the haystack, and then press it if it's there.
Yeah. Well, all right, everybody. Thanks for tuning in this one. I'm sorry there was no exciting trades to be taken, but a lot of actually great combos, in my opinion. GME back red, so nothing crazy there. But we're going to close it out here. I do, for Leaf Clovers, you do have a webinar with me in about 3 to 4 minutes, so I will jump on that, bring ready with more in-detailed questions. We can go into some in-detail stuff. And as always, Don mentioned, we do have our first all-day boot camp over the week, not all day, first online boot camp. I keep saying all day because the all-day webinar. 22nd through the 24th of June, which actually is really good timing because the 21st will literally be the deadline of when Roaring Kitty does whatever he does with his options. So come the live trading day on the 24th, that might be an exciting day to see how that plays out. But anyways, guys, as always, Wine Wednesday tonight. Unfortunately, I will not be there, but this will be the last Wednesday I miss. I will be there next Wednesday. Thank everyone. Give a thank you to Huddie and Dom for holding it down. And without further ado, have a great day, guys, and we'll see you guys next time.
Sounds good, you guys. Wine Wednesday, 7 p.m. tonight, 8:45 a.m. tomorrow for Good Morning NASDAQ. We hope to see you there. Have a wonderful, wonderful hump day.